Assalamualaikum warahmatullahi wabarakatuh. Group 7 will be presenting about gender differences in fintech adoption and investment behavior. Let me introduce myself first. My name is Nur Shakira Ifilda binti Kariwan, metric number 297452. So first of all, the rise of fintech has transformed finance, making it common for individuals to use these services for investment. However, gender has been an overlooked variable. Literature confirmed disparities in finance adoption. Women prioritize security while men prioritize functionality. In investment, men show higher risk tolerance and trade 50% more frequently, but this results in higher costs without better returns. Women are more conservative, conduct detailed research and stay disciplined, which yields higher long-term returns. In Malaysia, fintech adoption has accelerated with 3 million new mobile banking subscribers post-COVID. Research examines how digital financial inclusion mediates between digital financial literacy and financial well-being, focusing on gender gaps. Our research investigates these gender differences in fintech adoption and investment behavior, examining how financial behavior, overconfidence, and risk perception influence decisions, with financial literacy as a mediating variable.
Good day everyone. Today I will be sharing about the main issue in gender differences in fintech adoption and investment behavior. Financial technology has completely changed the way people manage money, invest and make decisions. With tools like mobile banking apps and digital wallets, investing has become faster and more convenient for everyone. However, even with all these modern advancements, research shows that men and women still use fintech differently. According to EPRA journals, women now use fintech tools more frequently than men, but for different reasons. Women mainly use fintech for financial planning, savings, and long-term security. They value simplicity, transparency, and safety when managing money online. Although some women face barriers like low confidence or less exposure to investment platforms, once they get comfortable with fintech, they show strong disciplines, self-control, and consistency in their investment behavior. In short, women focus more on stability and steady growth rather than quick profits. On the other hand, men tend to use fintech differently. They are usually more active in trading and high-risk investments, and they often adopt new technology faster. However, research by Sharon Chen showed that men are more influenced by overconfidence and optimism. Because of this, they may make riskier or even irrational decisions when investing. Men also explore more advanced tools and trade more frequently, showing high confidence in technology but sometimes overlooking potential risks. Both are shaped by factors like digital knowledge, trust, and confidence, which influence how they use fintech. These gender differences are important to understand because they affect how people interact with digital finance. By recognizing these patterns, fintech companies can create more inclusive and user-friendly platforms that meet the needs of both. In conclusion, fintech continues to grow, but behavioral factors such as confidence, trust, and risk tolerance still make a big difference between male and female investors.
Now I will continue with the discussion part. So first, let's talk about risk aversion. Basically, risk aversion means the tendency to avoid risk. When we compare between men and women, yes, women tend to be more risk averse. Or in simple words, they don't really like to take risks compared to men. But from what we found, fintech is slowly changing this behavior among women. For example, Go Invest, which is a platform under the Touch and Go apps, allow people to start investing with as little as 10 ringgit. So this make it easier and less scary for beginners, especially women, to start investing. On the other hand, apps like Wahid, Invest, and Versa are also great for long-term investment. What interesting about this app is that before you start, they will ask a few questions to see what type of investor you are. Whether you are a risk taker or risk averse. And if you are more risk averse, they will put your money into safer investment instrument. So this kind of innovations help women feel more confident and comfortable to invest. Meanwhile, men, since they are naturally more confident and like taking risks, usually they will go for trading platform like Binance to trade crypto. So next, I will explain about the overconfidence. From the article and news, we found out that men tend to be more likely to be overconfident compared to women. And this is supported by a survey from Money Crashers, where the respondents were asked how strong they think their investment return are compared to broad stock market like S&P 500s. And 22% of men said their return will beat the markets, but only 11% of women said the same. We can also see this overconfidence clearly during COVID-19. If you still remember, when a lot of men got into trading, especially in a speculative market like Forex and crypto, many of them actually are new traders, and most of them don't have any proper knowledge, but they still jump in to that trading, to that market, to chasing quick profits because of overconfidence. Women, on the other hand, are more careful. According to CMC markets, women take fewer trades and are more disciplined, which help them to stay consistent and longer in the market. But of course, we also cannot deny that there are still some women who are lack confident and trust to invest. And this behavior only limits their opportunity to grow their wealth.
Assalamualaikum warahmatullahi wabarakatuh. So my name is Nurain Syafiqah binti Muhammad Faizal and my metric number is 297525. So I will continue about the discussion, which is about loss aversion. So basically, loss aversion is a preference for avoiding losses over acquiring gains that are of equivalent value. So in terms of women and men, women are more loss averse than men in terms of their contribution to the investment behavior and also fintech engagement. So basically, women are more sensitive to possible losses and they tend to trade less frequently and prefer safer assets such as bonds and also saving products. While men, they also experience loss aversion, but they tend to endure temporary losses for long-term gains, and they actually more exposed to the volatile instruments such as stocks and also cryptocurrencies. Okay, so next we move to the herding. So herding is also a behavior but actually varies in the way of men and women tend to follow the action of others. So basically, for women, they are more inclined to use social proof, peer recommendation and also community behavior as a sources of information in making their financial decision. While men, they actually also herd, but often in competitive or performance-oriented environments, such as by emulating high-profile investors, responding to the market hype, or speculating on the latest trends in the meme stocks. So that's all from me. Thank you.
Assalamualaikum, I'm Nurul Husna. Today I will explain key recommendations to address behavioral bias in fintech investment. Let's begin with risk aversion. Usually, women investors prioritize safety and its limit their growth. To address this, financial education and awareness programs are essential in building confidence and knowledge. For example, the Invest Smart initiative by Security Commission educates the public on risk management and responsible digital investing. Similarly, with fintech apps like Wahid Invest, use guided portfolio to help users identify their risk tolerance and make personalized investment choice. This effort promotes equal and confident participation in the financial market. Moving on to the overconfidence, which is common among male investors. To reduce this bias, investors should develop self-awareness, discipline and rational thinking, also relying on the data instead of emotions. For instance, the financial literacy strategy by Bank Negara and the Security Commission is strengthen critical thinking and responsible investing habit. At the same time, fintech platforms like MADYA Malaysia use artificial intelligence to provide database portfolio suggestion. It's help make consistent and objective decision. Next recommendation for loss aversion. A useful strategy to manage this bias is by using 7% rules introduced by the expert investor William O'Neill, which recommends selling a stock once it falls 7% below its purchase price. This approach helps investors to cut losses early and stay emotionally disciplined. We can see platforms like TradingView and Rakuten Trade made it easier for their investors because have automatic stop loss features. This allows investors to plan ahead and protect their capital. Last recommendation is for herding behavior. Studies by Touch and Go show women are less likely to herd as they research and compare information before investing. To minimize this bias, investors should use fintech tools such as MADYA, TradingView, and Rakuten Trade to analyze the data performance and make independent decisions. To conclude all this recommendation, by combining financial literacy and fintech innovation, Malaysian investors can make smart decisions, be more confident, and have emotionally balanced during the making investment choice. Thank you.
In conclusion, our research demonstrates that gender plays a significant role in fintech adoption and investment behavior in Malaysia. We identified 4 key behavioral differences. First, women are more risk-averse, prioritizing security and long-term stability in their investments. However, accessible fintech platforms like Luno Malaysia have successfully transformed this caution into confidence, with female users increasing from 16,000 to over 120,000 in just 1 year. Second, men display overconfidence bias, leading to more frequent trading. Research shows men trade 45% more than women but achieve 0.93% lower returns due to overtrading and impulsive decisions. To address these differences, we recommend 4 key solutions: educational programs like InvestSmart to build confidence, AI-driven platform like Meteor for rational decisions, the 7% trading rule to manage losses, and promoting independent analysis to avoid herding behavior. Moving forward, fintech providers must design gender-sensitive platforms that balance innovation with trust. By recognizing and addressing these behavioral differences, Malaysia can create a truly inclusive digital financial ecosystem that empowers both men and women to achieve financial well-being. That's all from us. Thank you.